So it kind of sucks because I just recorded this video not too long ago, but I recorded it without sharing my screen, which sucks. But pretty much I'm gonna break down this selling opportunity that I was able to get on with GJ. It was a pretty simple trade, to say the least. Pretty simple. Again, we do our top down. We start from the weekly just to get a direction of where this trend is going. You don't need moving averages. You just need, again, just price action and noticing where you get your breaks and structure. So that was a level of support that held for a very long time. I don't know if this wants to fix. There we go. So this level of support held for weeks, almost a couple months, maybe 3 months. So from February to give or take July, this level of support held, and then finally it got broke to the down. It broke to the downside last month sometime. I'm sorry, in August it broke to the downside, and then pretty much now we had our retrace to this level of resistance here. If we look left, literally look left, you get your retracement back into that resistance level. So if I was to take this fib off so you can kind of see it, this is that level of resistance that we're currently in now for a shortened opportunity. And that's also, again, an exhaustion zone from the weekly. So pretty much you have everything you really need here on this time frame. Now we jump down, we just get, a little bit more confirmation, such as this bearish trend line. You also get, a more concise exhaustion zone, which pretty much will fix up to come, give or take there, right? And then to the high of the wick, which will be give or take there. I'm gonna lock that back. We get our exhaustion zone, we get our level of resistance, and then we get a fib. So we can actually grab the fib. I'm gonna go from this high to this low, and I'm gonna do it sideways so we can kind of get, keep our chart clean. But just understand that I went from this high to this low, and we get that 61.8% fib lining up with our resistance, lining up with our exhaustion, lining up with our trend line, which is a double whammy. And if I can actually drag this up, just know we have the 61.8 right there to the next high. We actually get a 50 completing around or about that level of resistance, which is, again, ratio confirmation, where we get at least two fibs lining up at or around the same price. Now we should drop down, so we're in a daily time frame. We're looking for just confirmation that this market wants to push down at our PRZ, which would be this red box. You got a daily engulfing, which pretty much engulfed out of this level, and then we got a retrace off that daily engulfing. So that retrace is where you potentially got your entries on lower time frames. So even if you drop down to like the 200, the 4-hour chart, or even a 60. The 60 is where you get your breaks and structure. What I did was, so I marked our PRZ, which is the red box, but I wanted to focus on, breaks of structure to the downside. Pretty much where I see price found support was here, because again, let's follow this. Price pushed up, pushed down, pushed up, pushed down, pushed up, pushed down, pushed all the way up, pushed down. This was kind of like a level of support. Didn't really break support to the downside yet until you found, support here at this level. So price pushed up, pushed down, pushed up, pushed down, pushed up, pushed down, pushed up, and then finally it broke to the downside, and then you got your retrace back up to this level. Your entries were like, again, here or at the highs. but you definitely, want to be in on this pair going short once you got the break, pretty much a break of structure to the downside out of this area. Uh, but that's pretty much it. My entries are, just show you on TradingView. I'm sorry, MetaTrader, where you can kind of see where I got in that on that retracement. So again, I didn't see any of this happen beforehand. I actually, got in when I see price, pushing up very aggressive, and then price decided to close back down here. To me, that was just confirmation. All right, look, this bullish market is getting weak. It doesn't want to push up higher above these highs. It wants to respect that area, and then pretty much it closed like that. You were all over this off that wick candle, that exhaustion candle. Get in, and then price again is starting to roll over now. My targets are pretty much, I went from swing high, low to swing high. My target one is going to be at the 382 for 400 pips. My target two is going to be at the 50 for about 500 pips. Let me just confirm real quick. I'm sorry, for 400 pips, and then the last one for 500 pips. To target three at the 61.8. I got 3 orders. So again, my stops are very tight. This is at least a 1 to, I don't even know. I want to say a 1 to 3 to target 1. So 1 to 3 risk reward to target 1, at least a 1 to 5, and then 1 to 8. That is immense right there. But again, I'm gonna keep you updated on how this, pair decides to play out throughout the week. But again, that was just short an opportunity. I'm gonna just show it to you one more time on a higher time frame. All the pieces to the puzzle. Your trend line, your fibs, your exhaustion zone, your level of resistance, your trend, your break of structure to the downside, and then your retracement. So these are all, pieces to the puzzle that you pretty much add, and you build about it that way. But again, I'm gonna keep you updated on how this play out throughout the week.